Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Adrian Salazar. He's a full-time real estate investor who began his career by purchasing over 60 single-family homes and then transitioned to multifamily, where his company has since purchased over 1,000 units over the past 3 years. Adrian, thank you so much for being on the show today.
Yeah, thanks. Thanks, Charles. Appreciate the invite. Looking forward to sharing some insights and some value.
Yeah, no, thank you. It's going to be great because I think you will. We have all different investors that come on the show here. You started at a very young age. So can you tell us a little bit about your personal and professional background, if any, before getting involved with real estate investing?
Sure. Yeah. So I grew up around sales. My father sold cars for 17 years. So I was always kind of inclined to, go into the dealership, hearing his pitches, seeing how he overcomes objections and how he doesn't let people leave the office and stuff. So I was around that a lot. And then I was, selling little things here and there at school. And then my senior year of high school, I got introduced to a network marketing company where we're able to sell products. Some people are a fan of it, some people are not. But either way, I guess that's really where I realized that, through personal development and through, relationship building and through, studying and becoming more self-aware about yourself, that you can build a business around pretty much anything, right? So I got really good at that, with that organization, built a huge company. We had people all over the world ordering product. And that's where I learned public speaking. I picked up the book Think and Grow Rich. I picked up Robert Kiyosaki, Jim Rohn, Bob Proctor. And so that's really what sparked my interest to this entrepreneurship, journey. A year after that, I got introduced to real estate through a meetup. And so very early on, I got put into these rooms with very successful people that I realized I can do the same thing. And so I just took massive action and I started learning and did my homework and, stayed consistent. So that's where I'm at now. How did you get started in real estate? What's your journey to where you are now? Let's just talk about like strategies and what you were doing. Yeah. So like I mentioned, I got plugged into a meetup in San Antonio. So I was in San Antonio studying construction. And I went to this meetup and they were talking about flipping houses, pre-foreclosures, off markets, how you can find them, how they're public records. And so I got really obsessed with the idea of finding motivated sellers. So I felt that was really my niche. I didn't have a lot of money. I didn't have good credit. I don't come from real estate. I don't come from a background of people with money. But I had drive. And so, really that's what you need to find off market deals, whether single family, any type of deal, really, you need some drive and some hustle. So I remember getting in cars, driving neighborhoods, knocking on doors, putting flyers out, cold calling, showing up to people who were behind on payments, trying to convince them to sell the house to me. And I got really good at it. So I ended up being the meetup people's favorite because I had a bunch of deals and a bunch of leads. And so I got plugged in with a couple guys. We worked very well together. We built a company for about 4.5 years. I was the lead sales guy, acquisitions. And we were, hunting deals all over San Antonio. We were looking at primarily single family, off market deals. We were wholesaling them. We were structuring subject to deals, owner finance. And I was just getting really plugged in with the organization and the group. And I realized hey, the more I learn, the more I earn. And, the more I learn too, the higher, people that come into my network, the higher level of people that come into my network. So I got really obsessed with it and I've been doing it for 11 years straight. So it's been fun. So when you made the switch into kind of multifamily properties, what were some of the things that you took from, say, wholesaling and you were able to transition? Because people will say, and it's kind of true, wholesaling is not really investing. It's more of like a marketing machine, which, I guess most businesses are. But when going into multifamily, what did you bring with you into that kind of realm? Yeah, so I brought the ability to find deals. I think when I transitioned from single family to multi about 6 years ago, I, brought the same idea of how I find these owners because, one, they tell you to talk to brokers. They tell you to, go to broker events and stuff. But I was, very young, 19, 20, 21, and so these brokers weren't taking me very seriously. Right. So I had to change my approach and I had to, look for the deals myself. So I would send postcards. I would make cold calls, the same exact thing that I was doing in single family. I just pulled a list for small multis. At first it was like 12 to 40 unit deals. And I started going to the appointments, making offers. And sure enough, I started getting some deals. I wholesaled a couple apartment complexes first just to kind of see the process. It's a little bit of a different process than closing a house. So I wanted to get, familiar with the process, did that, we did, to this day, I have 7 six-figure fee deals that I've wholesaled on apartment complexes. But after I did my first 2, when I moved into multi, I was like, hey, I got the third deal. It was a really good 16 unit off market. It was like 30,000 a door in a very good area. And I was like, hey, like that's really when the moment hit where I was like, I can't keep wholesaling, because like it's just putting me back in the same position, right? More money in the bank, but it's putting you back in square one where you have to go out and find another deal. So, I'm a big believer in life by design. And do what you want, where you want, with who you want, whatever time you want. And wholesaling wasn't really going to get me there. So, me and my business partner looked at each other and said, hey, let's buy this 16 unit. Let's raise the capital from friends. And we did it. It was one of the hardest things we did, but we raised $150,000. And fast forward after that, we started buying, larger complexes. So, at some point, about a year ago, we were at 1,500 doors under management.
Wow. Very cool. Awesome. When you're going direct to owner with multifamily versus single family, when you're speaking to the owners, can you give us what you found in your experience, some of the differences between conversations?
Sure. Yeah. Good question. So I think I always tell my sales guys, I have, a team of myself and new people come in, and people underestimate how much the education piece is important in this business. Like, knowing the language, because an apartment owner is different than a single family owner, So, on single family, it was being a therapist. You had to help them move. You had to help them find storage. You had to help them find, tend to their problems. And I was a therapist. And on this side of the table, I like it a lot because you're talking money, you're talking deals, you're talking business. Most of these people that own apartment complexes are millionaires. They value their time. Most of them too are open to the idea of selling. It's not so much just like, no, my house is not for sale. Like, sometimes these business owners are actually open to doing deals. So I like the conversations, but I think, one piece of advice or one thing that, I tell my team is to educate yourself, right? Like, there's a bunch of podcasts like yourself, there's multiple people that have multifamily podcasts that have amazing information, like this podcast we're doing right now. I wish I would have heard it, when I started, when I started off, but there's a lot of free information out there, books, even on YouTube. You go on YouTube, you watch videos of people structuring deals, how Fannie, Freddie looks at deals, what's a rate cap, what are different ways to do deals, structure deals. And that way, when you're talking to these owners, you don't sound like a rookie, because I can catch when someone does not know what they're talking about in this multifamily business. So if you haven't done the deals, plenty of deals to be able to have that track record, I suggest that you go online, look for research, practice speaking the language, because that will help you win deals, in my opinion.
When you touched on about before, but when you're mailing out or contacting outreach to these people, how does the marketing piece change? Because it's one thing that when I've been successful sending out direct mail to multifamily owners, it would be, we would just send out it wouldn't be a postcard, but it'd be like a card inside an envelope. And we'd have a pretty high return rate just on one sending. And then obviously you continue with that. But how about for you? Like, what have you found to be some of the most successful methods for reaching out to owners directly?
Number one, cold calling. So I still believe in cold calling tremendously. I think, getting on the phone, speaking with the other person, just building a relationship, talking, goes a very long way. And not a lot of people are doing it. So, because like me, myself, I have multiple deals. No one's calling me. No one's calling me to try to buy my deals. So the competition is very, few people out there. So I think, and it's cheaper, and it really makes you a better investor getting on the phone. So yeah, I think cold calling is my number one. Number two would be, postcards. But my approach really is more of building a relationship rather than wanting to buy their building. So that's kind of where it's at.
Yeah, you're building that rapport. And when I realized it before, getting to literally the finances, it would be several months, many months, maybe a year down the road that you'd actually get to that with multifamily. You know what I mean? They're they're not stressed like, hey, your utilities just got shut off. You know what I mean? Like kind of thing like that. It's like they have cash flow coming in. They don't have to sell in most situations. You know what I mean? And that's just kind of like, do you see the same thing when you would reach out to people? It's just building that rapport and then going back to them.
Yeah. I think I still tried to go for the close. Like I still tried to do, the Gary Vaynerchuk, quote unquote, jab, 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 right hook. Like there has to be a right hook at some point. So, I think I still pitch it. I let them know that I'm buying in the area, that, I have a management company. I have a whole team ready to go. But my target, whenever we cold call and send mailers, it's more towards the people who have balloon payments coming up. I do some research on the owners, maybe a little bit older age. So I do try to get specific with my avatar of who I'm trying to market to. But yeah, I mean, it just depends. It's really just chasing a conversation, laughing, smiling, standing up, like not being so salesy and not reading a script. And then just build a relationship and then just put them on a follow-up.
Yeah, that makes perfect sense. One thing I found, I've never purchased multiple properties from owners, but have you ever done that before? So you reach out to one and you're buying, because one normal thing I would find is like, hey, I have a 12 unit here and then I have this like 16 over here and a 6 unit here. And it's like a whole bunch of properties they've put together over a 20-year investing career.
Yeah, I've had that multiple times, probably 50% of the deals that I have found. The owner sold me another building, or the owner invests with me on another deal. There was a deal where I, went out to the owner's house, convinced him to sell it. We bought it. It was 300 units, and he 1031'd into another deal, and now we own it. So, that, and I've also had owners carry interest in the building that I buy. You get creative. It's because, again, going back to it, these guys are deal makers. Like they want deals. They want to make money. They don't necessarily need all that million in one chunk, and now another thing I'm doing to get creative is doing deals with no money down. So there's a 30 unit that we're purchasing with no money down, getting the seller involved and assuming his note. In the beginning, there's going to be, his note is due in like 3 years. So, we have 3 years to do the renos and do our thing. And then, the property is really not going to cash flow for us as GPs or owners, as JVs. But once we refi out in 3 years, then we're 100% owners on the building. And so that's kind of the model I'm trying to go towards, more of getting creative to find ways to own more of the building.
Yeah, real estate is I guess when you deal with like traditional lending, there's kind of like the scope of how it has to work, where it's 25% down, you know what I mean? 75% loan to value. And my dad was a real estate investor. And I remember one of his old partners was buying a property and they like finagled something where someone's old BMW got put into the contract. Like you can do pretty much anything for down payments or anything. Especially if it's a very interesting situation where you can think outside the box like you're doing. Can you like talk a little bit about how you're doing this 30 unit? You talked about taking back their mortgage. I take it they have no mortgage on the property. That's how you're doing this. Is that right?
No, they do. They have a loan on it, but we're assuming
3 years.
Yeah.
So how are they doing it? What are you putting down in the sense of giving them assurance, even if it's not financial, that you're going to be able to, within this time frame, renovate the property? Because I imagine you're bringing that money to the table for all the renovations, correct?
So yeah, so it's going to be a mixture of a few different things. It's going to be assuming the loan, because she has like a 3% interest rate on it. So we'll assume the loan. We'll get her to carry some interest and do full recourse personal guarantee. So basically, it'll be a guarantee on some of our assets rather than a lien position. And then, we have lines of credits for, with banks and institutions to do the rehab. So I mean, really the idea is to do no money down deal, but we have debt, right? So we have debt at interest that we have to be paying, but the true money isn't going to be made until we pay off all that in 3 years, refinance, and then we own the deal 100%. But we put no money down. So that's kind of like the creative part. I've had owners. I have a 42 unit as well that I bought 2.5 years ago. One investor put most of the money. The seller financed it to us, and then we've been slowly buying out my money partner. So every year we own more of the building, and it was all an agreed upon interest rate that he set for us. So. That's kind of the way, because, owning 5% of the deal, 10%. I mean, I've done syndications, full blown syndications that we own, 10% of the deal, and we do all the work. We raise all the capital. We put all our risk, And I mean, it's just, it made sense at that time. It just doesn't make sense anymore for me, to be honest. You know, I'm at a point now where I just want to get more ownership of the deals and implement my own strategies. So
yeah, the JV thing, JV kind of structure is great because you don't have the passive investor. And so if you're teaming with two other people, that's when you can, you don't really want to go back to investors with syndications, you know what I mean? And do like capital calls. Hey, we need a new roof. We didn't think about this. Or we need a roof in 5 years. We have to now raise that X amount of money right now and it has to sit in this bank account. Whereas when you're doing JVs, it's something where we do need a new roof in 5 years. Is everybody going to be okay to bring $15,000 each to the table at that time to do this or whatever it might be? And so you can be a little bit more lean because you're dealing with people that are active in the deal. And that's just some of the things that I found when doing JVs versus other type of getting into syndications. And now you have a whole nother part of the business, not just the SEC, but like a whole bunch of passive investors that once they put their money in, they like have something in their mind of I'm looking for payments to start almost like some sort of like dividend in this amount of time. And I don't want that to be disrupted.
Yep. And I mean, I have nothing against it, really. You know, I do enjoy, I have plenty of deals that are cash flowing. The investors are making money. They've gotten tax benefits from it. You know, they drive by, they, you know, take pride into it. Like, I love seeing that. And I love being able to help people that, you know, these deals are not open to because really, I mean, as a syndicator, these deals are not necessarily open to the public that a lot of people know about. Right. And there's so many benefits to it. So I do like the idea of putting this in front of, you know, my passive investors, but you know, I think 80% of my time I want to spend more on JVs. You know, and I mean, just business speaking, my 42 unit makes me more money than my 300 unit portfolio, like on some certain syndications, right? So, and I like one investor. You know, I don't know. I'm just getting more simple. You know, I have my own management company, so you know, I kind of want to keep it all in house. I don't want to necessarily be spreading myself too thin because it is a lot of work, like you said, all the K1s that we have to send out. You know, it's intense, but we get paid for it, right? So
it's one thing that you're really getting paid on the back end. You know what I mean? Whereas if you're doing a JV, you can structure it, you can take refinances, you can all these different ways you can kind of recoup a lot of your capital a lot sooner, and then also have cash flow up front because it's kind of you're keeping that. It's not being sent out the other way.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
One thing you're talking about with sourcing deals, and you're talking about, well, I'll put them on like a follow-up. Can you talk about some of the softwares or some of the program that maybe you utilize to be so successful at direct-to-owner marketing?
Sure. So I'll talk about the one that I had before and then where I'm going now. So I used to use a software called Podio. Podio for as a CRM. So I would track all my leads. I would have lead statuses. So I would upload new lists to it. And with apartments, you know, there's not thousands of addresses in your cities like in single family, right? So, you know, I would scrub them every 3 to 6 months, get new information in case it would sell. And then I would go down deep into the owner's names and not me, but I would have a VA do it, go down all the way into who, you know, could be a managing member, find them on LinkedIn, find them on Facebook, you know, Google. So I would really try to find everything about those owners. And then put them on a follow-up. So it would be a phone call, it would be a text, it would be a voicemail drop, it would be a newsletter, it would be a postcard. So it was a drip campaign that would go out once a week to all these owners. And then I would use a software called CallRail to make the phone calls. It would record them, you know, and it was a very good call tracking software. And we just hit it hard using also Mojo dialers. We would call three phone numbers at once. and we had a pretty good team going. But the thing is that we started buying these deals. And so that kind of slowed down, right? So whenever you have an influx of deals that you're under contract on, I mean, finding new deals necessarily isn't always the most important thing. It's taking care of what you're closing. So then we closed on them. And then, in the beginning we hired third party. Long story short, didn't like them. So we built our own. So it kind of started slowing down, because we were doing bigger deals. If you do bigger deals, you don't need to do 20 a year. Like you just need to do 5, right? So, but now I'm ramping it back up. Now I'm using HubSpot. So I'm creating a workspace with HubSpot. I have a team who's, designing all my flows for me, using AirCall for the calling software. I would use VAs from Fiverr for skip tracing. And I would just, send my mailers to Office Depot. Like I would give them the design that I wanted, and then I would have them print it. And actually I would basically write it so it could make it look handwritten. I would write it and then have Office Depot scan it, print it, and then it looks handwritten. So I would kind of go that approach. And then there's voicemail drops and texting. There was a time where we were texting people in the middle of the night, like, hey, if you're in charge of, or if you know anything about 123 Main Street, let me know, this is urgent. So 2, 3 in the morning, they're getting a text, that this is urgent. So they would call. Our callback was extremely very well the next day. So just getting creative. Not one thing works. I think, I've called owners on Facebook. Like I find them on Facebook and it has a call option. So I would call them through there. There's so many ways. It's just a matter of how bad you want it, really. I see a lot of people that just wait and play defense. In this business, you got to play offense. You got to go out and attack. And same thing with lenders. You got to go find lenders. You got to go find new ones. You got to you got to go. It's not a matter of just sitting there behind your computer. So that's how we bought 1,500 units in 2.5 years.
I read that you cold called an owner and then flew out to confront them and finally purchased a $21 million property. Can you tell us that story?
Yeah. So it's a deal in my city. So I grew up in a city, in my city here, 17 years, McAllen. And it was a deal that I knew very well. I passed by it a lot since I was young. And so I finally, one of my sales guys got a hold of the owner. He was in California. And he wanted $22 million. We were back and forth. And then, this was a time when I had so many investors calling me ready to go. So I felt very confident about the money raise. It was a very big raise. 8.5 for me. To a lot of people, it's not that much, but it was a lot for me. And so, but I bet on myself and I said, hey, you know what? I don't know how, I don't know when, I don't know from who we're going to get this money from, but we're going to make it happen. And so the owner called me saying he was working with a broker that was going to pay him $22.5 or something. And he was like, hey, if you can't get there, I'm going to go with him. And so, we're back and forth. Long story short, I found out his address, flew to him. Red eye, went to his door and I said, hey, this is me, it's Adrian. We've been talking back and forth. I really want to buy the deal and I'm here ready to make a deal happen. And so he liked that. We sat down, we got a deal done, signed the contract right then and there. And then he told me hey, you close on this? I have money at 1031. I don't want to take this out because I'm going to have to pay taxes on it. So go find a deal. Go find a deal for me. And who knows, maybe I might put it there with you. Right. So we not only did the deal there and saved all my earnest money that I was about to risk because I had a lot of money at risk and then came back home, closed it. We actually helped him manage it before we closed just because it was just going down. And yeah, we ended up finding another deal for him. There was another scenario where another completely other deal where the owner didn't want to extend the contract for us. And same scenario, we had a lot of risk capital. And I found his address, flew to him on Thanksgiving and convinced him, but I don't know. Now I see it as normal for me because I know now what it takes to get a deal done. Especially in a market like this right now, it's challenging. A lot of people are in this business. A lot of people are facing struggles and a lot of people, think their properties are worth more than what they're worth. Right. So, there's a lot of challenges for people to get deals done. So you have to go above and beyond. So now it's normal for me. Now it's if someone's giving me crap and they're not responding to me or something, I'm going to find out where they're at and I'm going to go, I want them to tell me no. If they tell me no, then I'll walk away. I'm not going to invade anyone's privacy, but tell me no. I want to just be able to come back home and say, hey, I did everything I could to find out this deal. And some people just stop. Once they find out, that deal is owned by an LLC and they can't find the owner, Like they stop and they go to the next one. It's like, no, like go on Google, go to page 4, page 5, go to Spokio, white pages, like look for VA, like try to find some information, because I also believe that if it's limited information that they show on public records, those are the best deals because not a lot of people have access to them.
When you're making out your criteria, what are some of the things like just like age of property, size of properties that you really, obviously you're buying all different types of property sizes, but how do you kind of narrow it down for your buy box for like JV deals, let's just say? Where do you cut off on ages? How do you kind of figure out all of your different filters, parameters when you're looking at properties or before you even build your list?
So a couple of years ago, a year ago, I was pretty much buying 1970s, 150 units plus. That was kind of my target. But now I'm really trying to get more towards the 40s, the 60s, the 80s, 72s, 32s, like the solid literal, brick building monopoly type style. 1980s plus, 85 plus. I want something newer. I'm done with the 70s, 60s. You probably know what I'm talking about. So they're very unpredictable. The tenant class. It's just a lot. It's a lot, especially if they have pools too, the underground plumbing, showers behind. It's a headache. So I'm at a point where I don't want to deal with those headaches anymore, to be honest. And I wouldn't mind paying a little bit more money for a nicer deal. 85 plus, 24s, 40s, 32s, 60s, 72s, over 100. It gets a little bit, it's hard to do a JV with over 100 units unless you have a really wealthy investor, but I'm also working on that route. But yeah, that's it. And then, people who've owned it for more than 10 years, people who, potentially have a loan that's suitable. I always ask right now when I'm cold calling and when my team cold calls is, hey, what kind of loans, is your loan assumable right now? What kind of interest rate do you have? When's your balloon? Because, most people got a lot of properties, 2021 with low rates and they floated, but, people still bought in 2015, 2016, 2017 when rates were low, and you could still assume those loans. So you got to get creative, and so really anything over 1985, smaller build in primary, secondary markets, other than the market I'm in right now is more considered tertiary, but primary, secondary markets, Dallas, Houston, San Antonio, between Austin and San Antonio, even those college towns, College Station, Kingsville, Lubbock. So, Texas is a very good market. I live in Texas, so I don't want to really spread myself too thin.
Yeah, it makes sense. How do you do your management on it? You said before you had issues before third party, you brought it in-house, but it seems like so many different properties, different size properties. So some of them are going to have on-site, some of them are not going to have on-site management. How do you handle that all as self-management in-house?
Yeah, so now I have a district manager. Now I have certain managers assisting in other properties, and we bill those properties proportionately. We have virtual leasing agents, we have, bookkeepers. So I guess now the economy of scale is easy for me to handle that. And in San Antonio, we built our team. So we have a team in San Antonio of on-site people. And then we have a team here down south with on-site people, and they all help each other. But in the beginning, it was tough, but I guess in the beginning I played a big role. I was the manager myself. So yeah, I don't know how, starting off in a random city, how I would do it, but I know I would figure it out. But I guess right now I just really have my team set up already. So it's easier. Yeah.
Yeah, with more units, it becomes easier with pretty much anything in business, especially with managing properties if they're close to each other, what I found over the years. So Adrian, as we're kind of wrapping up here, last couple questions before people learn more about your business. What are some common mistakes you see real estate investors make over these kind of almost a decade of being involved with real estate investing?
So a few things came to mind. One is people underestimate the power of going to networking events and meeting new people, and putting yourself in the right rooms. People think that they can do deals just by sitting in their house or their office all day and not go to any networking events. Most of my capital that I've raised, most of my amazing operator partners that I have today, that I can just call and ask a question to and they'll answer. Like I've met through going to NMHC, going to, a bunch of different conferences, family office club, masterminds. I think last year, my most expensive mastermind was $45,000. Like there's no way, that's a lot of money, and so for a mastermind. And so, I had to squeeze myself out of my comfort zone to put myself in the rooms of people that were going to help me get to the next level. You cannot expect to just sit at home, not go, to networking events and meet new people and be successful in this business. That's one of my opinions. Number two is education. I think a lot of people sleep on, not staying up to date with the economics and where rates are going and, being able to have those high level conversations with people. Ken McElroy has been a huge help for me on his podcast. He talks very high level economic stuff, multifamily developments, and being able to speak the language, like I was mentioning earlier. I think people underestimate the power that does and what that's able to do for you to grow your business. So meeting people, education, and taking action. I think there's a lot of lazy people out there, to be honest with you. Like, there is. Yeah. People come into the business and fall out. And the only reason why they fell out is because they quit on themselves, it's proven. You call people, you get leads. If you don't call people, you don't get leads. So, or talk to brokers or have meetings with brokers. People who are quitting, I ask them, how many, meetings with brokers have you had? How many investor calls have you called? How many new outreach, emails have you sent? The proof is in the pudding, so you got to take action.
Adrian, some great advice there for aspiring investors. So how can our listeners learn more about you and your business?
So you can find me on LinkedIn. You can maybe on your show notes, you can put, my email or something. My Instagram is Adrian Salazar with an underscore. I'm on Facebook. I tend to not be too much on social anymore. I have a lot of things going on, but send me an email, reach out on LinkedIn, and I'd love to connect with you.
All right. Well, thank you so much for coming on today and to all your success in the future. I look forward to connecting with you here in the future, sometime face-to-face.
Thanks, Charles. Appreciate it.
Hi, guys. It's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.